Good evening, future Maryland home buyers. Thank you so much for being here on this, I'm sure where you are, very cold night. It's definitely cold with us. My name is Jackie Muick. I'm the Advocacy and Communications Administrator for Maryland Realtors. I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us, we have Nikki Dade, a realtor with HomeSmart Realty, Jordan Diggins, a lender from Castle Mortgage, Jim Hall from Freddie Mac, and Catherine Kramer-Dale and Frank Bamunde from Maryland Department of Housing and Community Development, commonly called DHCD. Tonight, you're going to get an abundance of information to help you navigate and succeed in your home buying journey. The webinar will be recorded and sent out to all attendees after the conclusion of the webinar, along with slides from our presenters. We encourage your questions and we're looking forward to answering them. Please put all your questions in the Q&A box below at the bottom of your Zoom screen, and we'll answer them at the end of each presentation. With that, I'll turn it over to our Realtor member, Nikki. Nikki, you're still muted.
Thank you, Jackie.
Of course.
My apologies. All right. Let me get out my presentation up. Can you see my presentation fine?
Not yet.
Oh, hold on. 1 second. I had this all set up and now here we are.
As is the way. Go. All right, we can see your whole screen.
Awesome. Hold on. Are we good to go now?
We are.
Awesome. Thank you so much, Jackie. First, I want to thank Maryland Realtors, Lisa May, our Director of Advocacy and Public and Policy, as well as Jackie, who is our Advocacy and Communications Administrator, for organizing and hosting this educational monthly webinar series for prospective consumers and extending the opportunity for me to present in such an important initiative. Lastly, I want to thank you for showing up to invest in your education. Now let's have some fun. I'll start off with introducing myself. I am Nikki Dade. Normally, I go by Nikki Dade. I'm an active dual career real estate investor, licensed in both DC and Maryland, with a bachelor's in fine arts from the Real HU and also a master's in international business from Nova Southeastern University. I am the co-owner of Paragon Investment Partners, which is a small residential commercial investment firm. We're located in Oxon Hill, Maryland. Currently, my partner Pam Dorsey and I are invested in 149 doors across 3 properties in Columbia, South Carolina, and Baltimore, Maryland. I am a serial entrepreneur. Yes, I am. Philanthropist and advocate. And I will be considered a true Renaissance woman, if you will. I love what I do. I love helping others and lending my expertise to assist people achieve financial wealth through real estate. But most important, my role as a mom is the most important role for me. My sunshine and mirror. That's my heartbeat in human form. Now grab your pen and paper because this is going to be an enjoyable, jam-packed educational ride. So let's start with mindset. Why should you buy a home? Well, obviously, it's one of your basic essentials. We all need somewhere to live, right? It creates stability because you don't have to deal with a landlord. Now, you don't know what they're going to do from year to year, correct? There's no annual rental increases. Did you know that Maryland does not have statewide rent control? Only a couple of counties has it, but they must provide you written notice if they're going to increase your rent. But I can guarantee you, if you live in an apartment, there will be an increase in your rent with the renewal of your lease. I can guarantee you that. Okay, you're not aware of what the policies and regulations are going to be if there's any change in ownership, for example. So let's put that in context. If you have a mom and pop that owns, the apartment community that you live in, and now they sell it to a syndicator, okay? They come in, they change ownership, the rules and regulations will change with that because they're going to do improvements to the properties, and therefore they're going to pass it on to their tenants. They can do that, rightfully so, if there's improvements that have been done to the property. Okay. Paying mortgage. There's benefits with paying mortgage. You can write off your mortgage interest on your taxes. There's a depreciation credit that will help you reduce your tax liability. Your mortgage also helps you build the strength of your credit profile. Why? Because you're going to have a healthy mix with installments as well as revolving credit. It will boost your FICO 8 and your mortgage scores. Now, remember, our lenders are using the scores 2, 4, and 5, that scoring model, not FICO 8. All right. Jumping right into why is it one of the most important wealth building tools. Your home can be used as collateral. For an example, you can take out a HELOC that attaches to your home, use it again and again and again. Creatively, you have increased your annual income with no tax implications. Right? The secret to building wealth is increasing your streams of income by diversifying your investments. So when you pay down your mortgage, you're also creating a savings account in equity. Why? Because we're hoping that the value of your home will increase while you're paying your mortgage. And so the difference between that is your savings. That's your little bank that you can tap into at the right time. Generational wealth you can build here as well. Why? When you pass it on, you're passing on an appreciating asset. You want to make sure that you're passing it on correctly. So you want to talk to a real estate attorney to ensure that there's no gains or taxes and things that now your heirs will inherit. It is one of the most important, most tried and proven wealth building strategies. Do your research. Most millionaires and wealthy individuals have some stake in real estate investment. I can promise you that. Your primary residence, it is going to be your first and largest investment. You are using your money to serve you. Understanding that money is a commodity and it's only useful to you when it's moving. Okay? It's an appreciating asset, not a liability. As long as you can qualify for a mortgage, I can guarantee you the bank will lend it to you for your purchase. It is an asset that will never go to zero. You may lose some value, you may gain some value, but it will never go to zero. This is why purchasing a home is one of the highest and best ways to use your money. Okay, so why should you buy in Maryland? We have a variety of options here in real estate. We have your cozy starter homes, right? If you're just coming into the market and you're looking for just, somewhere to park yourself. Or if you're looking for your forever home and now you want to retire in this market, we have that too, because we have land that we haven't built on. And even those properties that we do have, there's still an opportunity for that too. So let me give you an example. In December alone, 2024, average units sold in Prince George's County, Charles, and Montgomery County was 1,141 units with an average median price of $450K. Now, mindful, there's an inventory shortage and there were high interest rates. But now let's fast forward to this month, January 2025. The average list price is $450K with 362 new listings and 213 of them are under contract. That's 60% of the inventory scheduled to be sold. Okay, that's according to our Bright service, multiple listing service. That means our market is thriving. It's thriving. We have a thriving job market in healthcare, technology, education. Okay, my favorite, Baltimore. It's one of the top 20 locations in real estate for investment. There's strong rental revenue due to low price points of entry. This will be a great house hack where you could actually live. And then if you bought a duplex, you could live on one side and now rent out the other side, and it will decrease your mortgage obligation by doing that. There's a variety, here we are, of down payment assistance programs because our government is focused not only on maintaining affordability, but improving the footprint of home ownership with down payment assistance programs. As a designated housing opportunity certified realtor, a main requirement as a specialist is to speak on workforce and affordable housing programs to prospective customers. So you will always find me, as I say, where the money resides. My MMP colleagues will break down specifics later, but I love MMP because they offer a variety of programs for first-time home buyers or repeat buyers with specialty products that you can combine to cover, your student debt. Or if you have a disability, the list goes on. There are other reasons that you should purchase in this market, but the main idea that I want to drive home is there are a variety of options and assistance programs provided by our government to assist you in accomplishing your goals. All right, so now how do I prepare for buying a home? You did the first thing. You showed up for your education. Okay, enroll in a home buyer's educational course. You can attend, right, like you're doing today, a first-time home buyers workshop or webinar. Read, 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 read. The internet is information overload. Talk to your family and friends about their home ownership experience when they've purchased their home, if they've sold their property, top lessons that they've learned, advantages or disadvantages. And more importantly, I want you to walk and drive the neighborhoods. See yourself in the neighborhood. Gather the intel on what the inventory looks like, the price points. You have to see it to believe it. Then next, you want to work on your income. Once you've gathered your intel on the market, assess your income to see how much you would be comfortable paying for a mortgage payment. If you're already paying rent, in most cases, your mortgage payment could be lower than your rental payment if everything aligns. Now you want to work on your savings. Don't worry, if you don't have anything in the bank, start tonight. Start tonight. Start today. Did you know that you could use your retirement account? Some retirement accounts, you can borrow against them so that it can assist you with your down payment as well as your closing costs. Next, you want to check their credit. Your mortgage scores now, not your FICO 8. I have to drill that home because typically when I'm talking to clients and I ask them, what are your mortgage scores? What are your scores? They're going to tell me your FICO 8. Your lenders are not using FICO 8. They're using 2, 4, and 5. They have not graduated to the newer credit scoring model. Okay, so understand and be mindful of that. If you don't have visibility on what your credit scores are, you should sign up for a credit reporting platform that will help you. You need to have visibility on where you are and remain lendable. Now that you've gauged your personal inventory, it's time to assemble your dream team of experts. Okay, hold on one second. You want to talk to those same people that you spoke to earlier and asking for recommendations. Now you want them to give you at least 3 referrals. Okay, 3 referrals of realtors and lenders that they've worked with. Schedule a buyer's consultation or a 15-minute discovery call. Vet them fully. Ask the tough questions. Who is your typical client? What do you add? What value do you add to the process? What is your commission? How do you handle tough conversations or situations when they arise? Because I promise you they will. This journey will be quite a ride, and it's not simple. There will be bumps in the road. It's not for the faint, but I can assure you anything that's worth having is worth working for. But also understand while you are interviewing and qualifying these professionals, they are doing the same with you. And everyone is not going to be a good fit, but there is someone for everyone. So don't be afraid also to ask and look for reviews or previous transactions, someone they will be willing to allow you to talk to. Lastly, do a Google search. See what comes up. You will be surprised. Technology is very revealing nowadays. We'll talk about the process now. So you've already really gone through the preliminary phase once you've been talking to people and asking for recommendations. Once you decide the realtor that you're going to work with, they will help you with identifying different lenders that they work with. And so they'll refer you to some of those experts. Okay? Excuse me. You want to schedule a real buyer's consultation at this particular point. Now you want to drum down to specifics, what your assets are, your savings. You want to make sure that you can cover your EMD, which is your earnest money deposit, your inspection costs, and your appraisal costs. Those are upfront out-of-pocket expenses that you must ensure you're prepared to cover. Your credit scores, your mortgage scores, again, I want to remind you. And then timeline, requirements of what your dream home will be. And then finally, you will sign the broker agency forms with all of the agreed upon terms, commissions, and etc. And now you are officially a client, vice a customer, where we as realtors will have a fiduciary responsibility to you as our client. Next, again, like I said, we will prefer you to a lender that's in our network. They will get you a pre-approval where they have verified your assets, not a pre-qualification. We need a pre-approval letter when we go out here and we start shopping, because we want the seller to know that you are a viable buyer and that you're serious before they accept your offer. We want to create an account in our portal where you can view the inventory. We select the properties based upon your needs and your terms, and then we decide where we're going to tour once once we get out there. Then if you decide this is what you like, we submit an offer. You love it. Now your realtor goes to work. We decide to submit an offer with that pre-approval letter that I mentioned, your EMD, and any required inspections or contingencies to help us seal the deal. Then the negotiation phase starts. The seller accepts our offer as is, or they may return with a counter offer with different terms. Once all of the terms are agreed upon and accepted, we have a fully ratified contract. The contract is forwarded to title with your EMD, and all parties have copies that they send to their respective brokerages, and then the clock starts ticking. Now it's time to negotiate, negotiate, negotiate. We schedule the inspections for the buyer. Now, remember, your inspection is for you. That's normally done within 3 days. And once the report is returned, if there are any additional requirements or things that come up, perhaps there were gutters that need to be slightly adjusted, or there's an expansion tank that needs to be put on your water heater, or some type of tear or something in your window screen. Okay, you go back to the seller with this, with an inspection notice detailing the requested repairs. They agree to the repairs with a timeline for them to be completed. Once they are done with all the required receipts or licenses, if needed, it's signed off on, and now we are officially under contract. In the interim, the lender is scheduling your appraisal while title is conducting a search to ensure you receive a clean title, where there are no issues with the previous owner that will come back to bite you. Maybe there's a water bill that need to be paid, or any tax liens or things that need to be removed. And then you're also going through the process of underwriting at the same time. The lender will order the appraisal to ensure the property is worth the amount of the loan. Okay, so remember, your appraisal is for the lender in terms of value. Your inspection is for the buyer, for you. Okay, at the time we receive the value, we found out if there are any lender required repairs. Now remember, these must be completed to receive the loan. Please note, there are 2 instruments to obtaining ownership of your home. There's title, which is the deed of your home, and then there's the mortgage financing instrument. You can be on the deed of the home and not on the mortgage. So you have equitable interest in the property, but no financial obligation because you're not on the mortgage. The appraisal comes back at value at the completion of the underwriting process, and you receive your financing commitment with all of the conditions removed. Last, your title is cleared, and we receive the clear to close. Now it's the fun part. It's closing time. You have to make sure you have your funds available. Schedule time with your title company to sign your closing docs. Schedule a final walkthrough before closing day. Transition the utilities. Schedule the movers. Once you sign for about an hour, yeah, it's a long process. Then you receive your keys to your home. The entire process in a nutshell. So I always like to encourage my clients to be creative as possible with financing their home. So the goal is to collect as many outside resources while using your money as leverage and collateral. So this is where I share some of the tips and tricks that I use as a real estate investor. And this is where I want to talk about where one of my clients used MMP. Okay, they purchased a $500,000 home in Prince George's County. They obtained 6% of the purchase price, which with this loan, yes, it's a loan, it's a silent loan. Remember that, okay? They'll talk more about it. They will receive 3% towards their down payment and then 2% towards their closing costs. She also was able to get a teacher's credit because she was a teacher in Prince George's County. And because she had such a great realtor on her team, we negotiated 2% in seller concessions. They invested less than 1% of their purchase price. They walked away with money in their pocket, over $3,000. That is phenomenal. Where do you know that you can use a program where you invest less than 1% in something that when you get ready to sell, it's almost infinite ROI, which is return on your money, okay? There's a house hacking thing that I always tell my clients that you can use. One of my clients purchased a $500,000 home in Prince George's County, borrowed against their retirement account for their down payment close. Now, what they did with their basement, they rent out a room. That room covers half of the mortgage payment and the utilities. He has also installed a brick patio, a fire pit, a jacuzzi, all of the things to increase the property of his value, which came in at least about a $25 to $35,000 investment with doing that. Now he's just waiting to figure out when he's going to tap into that. What was that savings account that I talked about earlier? Okay, so there's so many strategies that you can use to creatively finance your home. This you will have an opportunity to take a look at when the PowerPoint is shared with you. I don't want to waste any more time. I want to get to the questions. So I'm going to stop sharing and come online. Thank you again, Jackie, and all for the opportunity. Now let's see what we have here. I'm going to stop sharing. I'm going to come online. Can you see me?
Yes, we can. Thank you so much, Nikki. That was an amazing presentation.
You are more than welcome. Thank you for the opportunity.
Of course, and please, as a reminder to all of our attendees, please put your questions in the Q&A box at the bottom. Now is a great time for any realtor questions. When we're done with this, we'll keep going on to our next presentations, but we can circle back to any questions at the end as needed. So please, if you think of something, put it in that box and we'll get to it. But so, Nikki, one of the things that I wanted to ask you was, how do you have or help your clients figure out the differences between their wants and needs and deciding what home is going to fit their needs, and kind of negotiate that space where it's like, oh, I really wanted this thing. Um, and the reality of like, but what's going to be optional here so I can get the home that best fits what I want?
Absolutely. I always kind of go through what is mandatory and what's not. What is a negotiable and what's not a negotiable. So I know what hard stops are and what aren't. But at the end of the day, I always start with their end goal. What are your goals here? What are you trying to accomplish? And then I kind of back them into whatever we can do from there. And it really burns down to how much money do they really want to put out at the end of the day. Because they can start off with a lot of things that they want. And then when we start to present the opportunities out there, we say, well, this is how much it's going to cost. And then all of a sudden, the list decreases.
And I know you mentioned home inspections, but is there anything that you'd want to add about like the importance of home inspections and expectations your clients have going into them?
Absolutely. Like I said, the inspection is for the buyer. So you certainly want to make sure if there's anything that you need to be aware of in terms of lead paint or maybe there's an exhaust or something that was installed properly that needs to be fixed. There could possibly be some type of plumbing issue or something like that. Like none of that stuff is going to be done by the lender, right? That's the responsibility of an inspector. That is like a honed in inspection, and I highly recommend doing that because there are things that are going to come up that wouldn't necessarily come up in the end that you wouldn't know. I obviously know how to look for some of those things because I invest, but you don't want to rely on me. You want to rely on the professionals. So I definitely strongly recommend getting an inspection because
Awesome.
you're stuck with it once you sign the papers.
Agreed. Yeah. One of the questions that came in, and Nikki, if you have anything to speak to, please do. But are there programs in Howard County, Maryland as well? I know you mentioned some of the PG ones. I know MarylandHomeownership.com, where you've signed up for this webinar this evening, also lists on that website the different county level programs that may be available. Nikki, if you have anything to contribute to that, you are welcome.
There
But
is
yeah.
one, I can't remember the exact name of it though, but it's through Maryland Mortgage M&P. So I'm sure they're gonna speak on that. There are so many things that are specific to the county too. And then there's a broad umbrella, excuse me, that's just for Maryland on a whole. But yes, there are Maryland Montgomery County programs specifically out there that can be combined, like I said, with the other programs with the First Advantage as well. But I'm not the specialist for M&P. Let's be clear.
Yeah, more on that shortly.
Yes, it's
And
coming.
also, as a reminder, slides will be sent out after the fact, as well as a recording of this webinar to all registrants. So yes, you will get this as an attachment later, so you can come back and carefully follow any steps you want to follow.
Absolutely.
Do some sellers help with closing costs, maybe even down payment assistance?
They're not going to help with your down payment. No, that's not the seller responsibility. That's why you need to go through a program so that you can get down payment assistance. However, there is a market still where sellers are given some concessions. Everything's negotiable. That's why I said deals are not found, they're made.
Yes. So just as a quick definition, seller concessions is, correct me if I'm wrong, Nikki, when the seller is willing to put forward some money towards the closing costs specifically.
Correct.
Yes. If you pay an extra $75 towards the mortgage and it goes to principal, can you take 8 to 10 years? Okay,
That's a lender
Camille,
question.
this is a lender question, and it is a question about paying extra to principal each month. So, Jordan, when we get to you, if you want to mention about that
I
kind
can
of
say
planning
yes.
long term,
We can certainly discuss extra payments. Yeah, we can
yes.
certainly cover that.
And it looks like, okay, in the home buying process, last question, Nikki, and then we'll continue. Is there
Okay.
a difference between buying land and buying like a home or an existing property?
Yes, that's a completely different process too, and a loan product too. So we actually have USDA that you can use for, and again, I'm not, I just know this stuff now that you can use towards purchasing land here down in Charles County, but it's definitely a different process.
Awesome. Thank you so much, Nikki. If you're able to hang around for more questions, if they come in the next 30 minutes or so before the end of the webinar, please do. Thank you so much. But I'm going to pass it over to Jordan now. Thank you so much again.
Thank you.
Hi, everyone. Jordan Diggins here and Gary Becker. Hi. Thanks for showing up. Just want to thank the panel and Nikki. That was very well curated and put together. Just want to say thank you for everybody for the opportunity and look forward to kind of explaining a little bit more about what we do. Just to kind of dive in, I'm going to share my screen here. Let me know if everyone can see. Everyone can see, if that's okay.
Yes, we can.
Lovely. Okay. So the name of our company is Castle Mortgage. We've been in business. We actually rebranded. We've been in business since 1999. So this is going on our 26th year this year in business. This is my father. I'm actually his son, Jordan Diggins. And Gary here accompanying me is a 25-year industry veteran loan officer who has known and been around the company for 25 years. A little bit about us is much like Nikki kind of had talked about, working with a very accredited lender, I think is really, really important. You definitely want to check out reviews online, just to kind of highlight here. Google is a great tool, as well as the Better Business Bureau. So we highly encourage that you do some vetting ahead of time, just because, again, you can work respectfully with the wrong people, and that's not what you want to do. You want to work with somebody who has a little bit of experience in these areas. We are a full service lender. So we have underwriting in-house. We offer a variety of products, both government and non-government products. And we offer an array of services, much like Nikki had talked about investment products. We offer those. We offer products for first-time home buyers. So we are a full service lender, and we are in 22 states. So we are all over the country. And we have a physical presence here in White Marsh, Maryland, or Middle River, Maryland, right next to Michael's Cafe. So that's where we are. That's where we are in the Castle office. So just want to say a little bit more about Castle in the sense that one thing that differentiates our company before I kind of pass the baton, so to speak, to Gary, who's going to get him into the weeds a little bit more. Nikki kind of touched on it. Education is something that, from a lending perspective, is very, very, very important. Doing a lot of research and reading, I feel like it can be very overwhelming. And I think that's something that can help to differentiate a company, right, is in something that we both instill in our sales representatives, as well as something that we've built the brand on. You need to understand the documents that you're signing. You need to understand the programs that are made available to you, right? And there's a lot of, again, information, I call it noise, that's out there. And what you want to do, right, is kind of having some the best way I can phrase it is understanding a little bit more about where you're trying to go, and then also kind of checking that with someone who is an industry expert. I think that's the best way to approach any type of large investment purchase, something that we're talking about. So I'm going to pass the baton to Gary very quickly, and he's going to talk a little bit more about kind of the different buckets of what you should be considering. I don't want to be super overwhelming with literature and knowledge and information, but there's kind of three main buckets that we kind of felt was helpful as a diagram to explain. Number one, how to kind of get started and what that looks like. So Gary, without further ado.
Yeah, I mean, I always tell a lot of my clients when I first talk to them, that basically there's really three pillars of buying a house. There's your credit, your income, and your down payment. And the credit sometimes is the one that we try to just make sure that's probably at least around like a 580. The Maryland mortgage program requires a 640. So if it's quite not at that mark, I always try to somewhat coach the client to see what we can do to try to get the score up. That's very important. That we try to get the credit where it needs to be. Also, it's pretty important that we have steady income. I mean, everyone's situation is different. I just talked to someone recently that is still in school, but they're getting ready to graduate. Well, that's okay. They don't have to have 2 years of income. They can, as long as they're going from being a student to now graduating, going to the same field, then we can use a salary right away. And then next is the down payment, and that's always important. But the thing with the down payment, the Maryland mortgage program that's so great is that helps bridge the gap with like Nikki was talking about, is kind of finding money. It's funny that Nikki brought up that situation, because I just had a similar situation that we closed with a client recently that their credit was pretty good and their income was solid, and but they didn't really have any money for for closing costs, down payment, or anything. So we used the Maryland mortgage program in a combination with seller help, and they were actually able to get into their house with just their initial deposit of $500. Now it's rare, but it did happen, and I think we're seeing the shift in the market a little bit right now. With our interest rates climbing a little bit, we're starting to see houses sit a little bit longer. So I think it's starting to be a great time to buy, to where you can possibly negotiate with the seller help. So that's kind of like one of the situations that worked out really good there. My main thing is, when I'm talking to clients, I like to take an application, like a mini application, just to have have a real nice conversation of what their wants and needs are, and kind of get the whole snapshot. Because sometimes the Maryland mortgage program might not be for everybody, but I always look at it. It's a great program. We do loan states, and the Maryland mortgage program by far is the best down payment assistance program out there, in my opinion. The rates are super competitive. The amount of money that they're giving you for the down payment assistance, which is in the form of a loan, it's a significant amount. And then there's other programs like the smart buy, where it helps you if you have student loan debt. They can help you. And I'm sure MNP will go into that a little bit. I don't know how deep they're diving into their programs, but that's another excellent program as well. I guess there were a lot of questions. There are probably a lot of lending questions. Is there any question that I can answer?
Yes, there are. Are you ready for the Q&A section?
Yeah, let's dive into it, because I'm sure that's a lot of there could be a lot of questions here for me, and I'll be happy to answer as best as I can.
Perfect. Awesome. So yes, please, if you have any lending questions, now is the time. We have a few to get through though. So extra payments, and how can extra payments in terms of long-term planning take years off of your, say, 30-year mortgage?
So the rule of thumb, one payment extra a year. Now this isn't like an exact science, but because there's amortization schedules and things like that, you have to run. But typically, one extra payment a year will take about 6 years off your mortgage. Okay. Now that doesn't mean if you make 2 extra payments a year that it takes an extra 6 years off. It's the more you make, yes, the more years it will take off your mortgage. I'm sorry, the more extra payments that you make, the more years it'll take off.
Yeah, it's a good idea to look into, and a lender I'm sure that you work with will be able to talk you through that process as well in your long-term planning for your mortgage.
If I could just add just one quick comment there, I'll happily include this as a resource for anybody here. This is our mortgage calculator, and what's really nice about this is that there is an extra payments feature down here. So if you wanted to go in and respectfully either say, hey, I want to put $10 a month, what would that do respectfully to my loan? Maybe it's a one-time annual payment down here, or maybe it's just something that's annual every January or February, or maybe there's just a month that you had and say, hey, every 4 months I want to do, what would that look like? That can kind of give you an idea, as well as that amortization schedule that Gary was speaking of. What would that do, as well as your payments over time in a nice little graphical format here. So just wanted to be.
Jordan, can you copy that link and put it in the chat?
Yeah, very much so. So that's a nice resource regarding those that had questions for extra payments. And I'm going to put that in the chat, as well as include that for anybody that as a resource towards the end here.
Awesome. Thank you. Okay, another question. Can you request a lower interest rate as a first-time home buyer and get grants from mortgage points to lower interest rates?
So with the Maryland Mortgage Program yesterday, you can't buy down your interest rate on the Maryland Mortgage Program, but there are different. If when you go, the Maryland Mortgage Program has an excellent website, and you can go rates. So you want to, can you pull up MMP real quick?
Sure.
Jordan's going to pull up MMP website real quick and share the screen. Just type it in. So, okay, so you see right here, and I don't want to steal any thunder about Maryland Mortgage Program, but you can see if you're looking at the first time advantage, the first column here, you can see there's different loans that you can receive. Like there's the $6,000 one, there's the 3%, there's different, and then 4%. What that's saying is the 5%, the more money you borrow, the higher interest rate you receive. So if you're worried about interest rates, say you're looking at the government one, like, and that the government's usually FHA and VA, or USDA. So that's at 6.625 right now. And that means you're borrowing 3% of your new loan, not of the purchase price of the loan amount. And so as you can see here, the more money you borrow, for the down payment assistance, the higher the interest rate goes. So if you go to the first time advantage 5%, you're at 6.875 instead of the instead of compared to the 3% where you're at 6.625.
And just to, I know that may come off as overwhelming for a lot of prospective borrowers. Which one makes the most sense for me? Which one is going to put me in the best position? And which one's right for me, right? We have the ability to kind of walk you through and explain. Someone like Gary's going to go through and respectfully run payments on, say, hey, what does this look like? What makes the most sense? A government or a non-government product, right? So I think that while it's important to understand some of the stuff that we're discussing today, it may seem overwhelming from a lending perspective. That's why you trust in your partner. And if we do our job well, we set Nikki up for success, who's going to go and take you house hunting, right? And just a quick side note here, we speak on education and we're speaking on, the differences, right? And what can help stand somebody and make somebody better respectfully as a lender versus what sets Castle apart. And I just want to point out that the difference, one of the major differences is that we work on pre-approvals as opposed to pre-qualification. So when you work with Gary, he's going to run your file through an automated underwriting system to make sure that when we say, hey, you're qualified, we're going to set both Mickey up for success, as well as this is a verified pre-approval. A pre-qualification, you'll find that a lot of banks and a lot of companies out there, they take a verbal application, and there's a lot of intricacies in lending, right? Hey, you're paying child support, or everyone's borrower profile. It's unique, it's different. So I think it's really important to take into account that with all of these, unique borrower situations, that this is what you have a trusted lending partner to go in and explain and walk you through those differences.
Could you also just give a quick overview for anyone who's not familiar with points and like what they are, how they work, and why you may or may not
So, okay,
want some?
yeah, no problem. So on a regular loan, we're not talking about, the MMP, because MMP, there's no points on that. And what a point is, it's a percent of the loan amount that you can use to lower your interest rate. Okay, so in other words, we'll just use a rate right now, say 6.99. I'm just pulling it out of the air right now. Well, 6.99 may be with no points. Okay, we'll say, well, if I pay an extra, say it's a $300,000, and if I pay an extra $3,000 in closing costs, will that get me down to 6.5%? And that's what's called paying points and buying the interest rate down. That's a discount point. And it doesn't always equal, 1 point doesn't always equal. It depends how the markets are playing out at that point in time. It depends if you're looking at conventional or FHA or VA. There's a lot of factors that go involved in that, but you're essentially buying the interest rate down by using you're rolling in a percent of closing cost to buy the interest rate down. Does that make sense?
And
Yes,
just
it does.
point to build off of Gary as well here, does it make sense to pay points is probably a good question that maybe you're thinking about. And I think that again, when you speak with a lending company, so to speak, that knows what they're doing, a good person's going to advocate on your behalf. And what do I mean by that? They're going to ask the right questions. What's your 3-year plan? What's your 5-year plan? What's your 7-year plan look like? I know folks that, hey, I'm going to be stuck in Baltimore for 2.5, 3 years. They come here, they move, they work, and then they're off to a new place because of employment related matters. Does it make sense to buy down your interest rate and spend extra money in closing costs? What's the math to recoup that cost? That's an investment. So I think that walking you through those processes and giving you options is something that everybody likes options. It's important to have and understand, am I going to be in the best position today, but also 2, 3, 5 years from now? And if you don't know, like most of us, what your next 3 or 5-year plan looks like, I think it's really important that, hey, maybe we do put a pen to paper and together we work through that and say, maybe there's a hybrid scenario. Maybe paying 1 point necessarily doesn't make the most sense. Maybe we buy it down 0.5 point. Maybe we take a hybrid approach. So I think that, again, working with the right company, they're going to look at a long-term type of plan for you and outline your options. And that's gonna really give you the borrowing power that you need in order to succeed. Jackie?
Great, thank you. All right, really quick, because I know we have 2 more presentations we want to get to, so really quickly, if you can. One question that came in is, what are the target numbers for credit scores and suggested savings for closing costs, and how is that different for VA loans? I know that's a lot to cover, but if you could give us a quick overview.
Yeah, real quick, MMP requires a 640 credit score. So if you're looking for MMP, Maryland Mortgage Program, 640 credit score. But if you're in MMP, you have to have a 580 credit score. Really, you can go down lower than, you can go into the 500s for government loans. They turn into manual underwrites. FHA is 580 unless you put 10% down or greater, they can go down to 500. But it really depends because the underwriter looks at it, it turns into a manual underwrite instead of typically an automated underwriting. Okay, VA is probably the most flexible loan out there. You can, it's 100% financing. You can go down lower than the most, but they're going to want, when you're looking at manual underwrites when it comes to credit scores, we're looking at compensating factors. We're looking at, do they have rental history? Do they pay their rental time? How's their for the last year? We're looking at different factors like that. What are your debt to income ratios? Debt to income ratios are very important in loans nowadays. And all that is I'm trying to be quick, is your debt load divided by your income. Okay, a lot of times we want to see, the Maryland Mortgage Program, they're at 45%. Unless you have a 680 credit score higher, you can go to 50%. But typically, and that's the combined. That's not the housing ratio. That's your combined. That's with all your bills. What was the other question about on there?
Credit scores, suggested savings for closing costs, VA loans.
Suggested savings for closing costs. The more you had, the better. Just like everything else. I mean, everyone's situation's different. Rule of thumb might be, $10,000, but you don't need $10,000. Like I said, I was able to get Nikki as well. We were able to get somebody in the house in the right situation, with little to no money out of pocket. Everyone's situation's different. And if you're talking about VA, 100% financing. So, I mean, essentially, if you have a VA loan, you have someone pay, to start to pay the closing costs. If you're a veteran, you can get into a house with no money in your pocket. So everyone's situation is different. It's a very hard question to answer, because everyone's situation is different.
Yeah.
Other
Thank you.
questions?
Thank you so much.
I can fire them off quick.
We do need to move on to the next presentation, but
Okay.
if you're able to
Yep.
hang around, we can circle back on some of these
Okay.
questions as well at the
Perfect.
end.
Yep, sounds good. Thank you.
Thank you,
Great.
everyone.
Okay. All right, Jim, take it away.
All right, Jackie, thank you. And as always, I like to commend you and Maryland Realtors for providing this opportunity to the folks in Maryland. You're providing a great service, and you've heard the word education used throughout this webinar, and it's really, really critical for consumers to be educated in both the home buying process and the mortgage application process. So, further ado, I'm Jim Hall, and I work for Freddie Mac. You may have heard of Freddie Mac. We are not a, I, I should say, Freddie Mac is not a person. And I've gotten that question, is there a real Freddie Mac out there? He's not some Scottish guy named Frederick Macmillan. We are a government-sponsored enterprise that was created in 1970. So we're in our 55th year, and we were created by Congress to provide affordability, stability, and liquidity to the housing markets. So we are a mortgage company. We work in the secondary mortgage market. So I am not in competition with Jordan and Gary. Okay, we do not lend directly to the public. What we do is we create mortgage programs for lenders like Castle to use and the Maryland Mortgage Program to use. And then what we do then is we purchase the mortgages that they make, and that's where we provide liquidity to keep the lending process going. And then with those mortgages that we purchase, we put them into securities, and they go into the investment market. So I know we're tight with time now. We got 12 minutes left, so I'm going to shorten my presentation, and I'm just going to focus on education. So I'm going to share my screen right now. Just give me 1 second here. Okay. And I want to talk to you about Freddie Mac's Credit Smart program. Okay. This program has been around for 20 years, and this is Freddie Mac's consumer education literacy tool. And like Jackie said, you'll be getting a copy of these slides. And in the first slide here, the Credit Smart website through the process of understanding the home buying process and the mortgage application process. It's all done online. It's free. It doesn't cost you anything. So, again, I commend you for tuning in tonight. You've heard a lot of great information from Nikki, Jordan, and Gary, and you're going to be able to get something tangible and walk away with this literacy tool that, again, will help you have better dialogue and communication with Nikki and with Jordan and with Gary when you're talking about buying that home and going through the mortgage application. Because knowledge is power, and you really need to know what you're getting into, because this is going to be the biggest financial transaction you're probably going to make in your life. And we want you to make sure that you get the right property for you, and that then you start making your mortgage payments and you start gaining equity, and then hopefully throughout the years the generational wealth will be passed down to your heirs. So again, please check, and I think will be very financial capability side has the essentials. And really what that does for you, it gives you the soup to nuts as far as the whole process. The home buyer you side, that is for the immediate need. Okay. So we did a major overhaul to Credit Smart within the last 2 years to make it more user friendly, especially for you know younger millennials and Gen Zers who grew up with technology. So we definitely had to meet the needs of the growing generation. So what you're able to do is go in and create your own dashboard. You can personalize it. You can track your progress. You can earn badges. You can keep notes in a
Apologies. It seems like oh, there you are, Jim.
Oh, okay. Did you lose me?
Just for a second.
Okay. All right, I'm back. Okay, can you see my screen?
No, not yet. You'll have to reshare.
Okay. Yeah, the internet's been kind of wacky with this cold weather that we're having. So let me let me okay. Sorry about that, folks. All right.
There we go.
My screen back.
Okay.
Okay. All right. And this is the Credit Smart Essentials part. And this is something for you to keep during your home ownership journey. And there's multiple modules, and it helps you, set goals, understanding earning and spending, being a savvy borrower, and planning to save and preparing and protect. And, it's really important to understand a budget. And I can remember when my wife and we purchased our first home 35 years ago. And my dad, he told me, Jim, you need a rainy day fund. And I had no idea what he was talking about. And I said, well, what are you talking about? He goes, well, there's going to be, times where you need quick money to fix things at your house, and, like a prophet, like 2 years into it, my wife and I came home and, our water heater went, our basement was flooded, and, we had carpeting down there and it was ruined. And, I had some quick cash. I was able to get it fixed while I put in my claim to my homeowner's insurance company. But if I didn't have that money, I would have had to go to dad and it, on bended knee. And maybe that's why he told me I needed a rainy day fund. He wanted me to avoid that. But again, that, I'm just joking, but it's very serious. You know, you need money for, it's just not buying a house, because you have to furnish it, you have to buy everything to maintain it. And it's very important for you to understand that. And not only that, but to also understand the importance of making that mortgage payment, because again, it's exciting to buy the house, but it's your asset. So you need to be prepared to protect that asset at all costs. So home buyer you, like I mentioned, that's for the now. And this is only 6 modules. And this will help you, like I said, have better dialogues with Nikki, Jordan, and Gary. So you go through these 6 modules. It shouldn't take you any more from 2 to 3 hours to do. You can do it at your own pace. And then you have to pass a test at the end and achieve 80%. And once you do that, you get a diploma, you get a certificate, which is good for 12 months, and it's nationally recognized and meets the national industry standards for homeownership education and counseling. So, if I'm a realtor, or if I'm, a loan officer, and I see you invested the time to go through this, you pass that test, you got that certificate, I know it's go time. Okay. I have to get you that house that you want. I have to get you approved for that mortgage. So again, this is, a great tool for you to have. And again, like I said, it doesn't cost you anything. So it's just a matter of you putting in the time to better educate yourself on this. And, with that, I know we only got 5 minutes left, so I am going to stop sharing my screen. You'll get a copy of those slides. And I know we haven't given much time to Catherine and Frank, but, I did my best there to save some time for them. So again, Jackie's going to send you those slides. Sign up for Credit Smart. Thank you.
Yes, thank you. And we'll circle back on any questions that have come in at the very end because I want to make sure Catherine has at least 5 minutes to be able to give her
Okay.
presentation. I'm so sorry, Catherine.
It's fine. It's fine. Because you know what, you guys? You're saving the best for last. That's how I look at it, right? First of all, I don't want to repeat anything, but I want to let you know that I really do appreciate the fact that everyone has stayed on the call, and this is an amazing opportunity for you. I want to let you know that this is our website. It is www.mmp.maryland, MARYLAND.gov. We are the State of Maryland Department of Housing and Community Development. We are a state agency. In order to apply for the Maryland Mortgage Program, you do not apply directly with us. You would actually come to our website. You would go down to the bottom of this first home page, and you would go to Talk to a Lender. And you would go to Get Started, and you would click Get Started, and you would fill out your name, your phone number, a good email, any information they ask for, and one of our top performing lenders will reach out to you. Well, we have one of our top performing lenders on the phone that's done presentations with you right here today. So Barry and Gordon and all of their staff have been with us for many, many years. I've been with this state program for 16 years. They've been a lender with us longer than that. You have a lender on the call that you can refer to. When you're on our website, as they showed, these are the interest rates. These are all the amazing programs that you can take advantage of. In order to be eligible for the Maryland Mortgage Program, the lender will make sure and qualify you for meeting FHA, VA, USDA, and conventional guidelines. They're going to do all the normal stuff that they do as a lender. When they think that you'd benefit by using the Maryland Mortgage Program, they are then going to make sure, are you a first-time home buyer? Or you don't have to be a first-time home buyer. You could be a repeat, but you cannot own anything anywhere in the world at the time of this closing. And this property that you're purchasing with the Maryland Mortgage Program has to be your primary residence. You cannot turn around and rent it out. The idea of this program is to help you achieve the American dream of owning your home. So you can't own anything anywhere in the world at the time of this closing. And this has to be your primary residence. In order to be considered a first-time home buyer, you either A, have to have never owned anything anywhere in the world at the time of this closing, or hadn't been on a deed or had any interest in any property anywhere in the world in the last 3 years. So if you did own a home and you sold it and you've been renting or living with family, if you haven't been on a deed for 3 years, you're a first-time home buyer according to us. Or if you are a veteran and you would like to use our veteran exemption form along with your DD 214, we will consider you to be a first-time home buyer. Also, if you are not any of those 3 items, the lender has one more opportunity to see if you're eligible as a first-time home buyer with our program. There's a mapper that we have that's shared with the State of Maryland Department of Planning as well as with us. They would put in the property address that you're interested in purchasing. And if it shows up in a T for a targeted area, you would automatically be considered a first-time home buyer. We have household income limits. All right. The income limits are very, very generous. This is not to low to moderate income. We have asset guidelines. If you have a lot of money, why are you coming to the state to borrow money? So the asset guidelines are that you cannot have more than 20% of the sales price of liquid assets. So you're coming to us because you need down payment and closing cost assistance. We have home buyer education requirements where we show a list of where you can do home buyer education, either online, in your pajamas with a cup of coffee, or you could do it at a local housing counseling agency. And then the DTI and the credit score. The DTI stands for debt to income ratio. And the credit score. So you're normally, as the mortgage lender indicated, our minimum credit score to qualify for any of these programs, you cannot be below 640. And the debt to income ratio is at 45. We have FHA, VA, USDA, and conventional loans. So if you're interested in using the Maryland Mortgage Program, currently none of our programs are grants. If you borrow money from us, like the $6,000 or 3% or 4% or 5% or 6% or $25,000 if you buy in Montgomery County, or you borrow money from us to help you buy a house and we'll help you pay off student loan debt, you have to pay back the first mortgage when you sell or refinance out of us, and you have to pay back the down payment assistance. Our down payment assistance does not have a rate attached to it. You don't have to make any monthly payments on that. So if you borrowed the $6,000, it just stays $6,000. And when you sell or refi, you pay back the first mortgage and you pay back the $6,000. All of our loans are fixed 30. Our programs are phenomenal. In order to qualify, it's not difficult at all. It is not for low to moderate income. It is not you're coming to the state to get a handout. It is a fantastic product. We have done amazing production, and this is an opportunity if you know anyone, and most people have the greatest obstacle of, hey, I've got good credit, I've got a good job, but I don't have enough money saved. That is where the Maryland Mortgage Program comes in. Yes, you can use this product. We currently are offering a special for Montgomery County. If you work for a Montgomery County agency, if you're an employee of Montgomery County and you're buying in Montgomery County, you'll get $25,000. It's a loan, you got to pay it back. We will help you buy a house and help you pay off student loan debt. We currently, I'm trying to answer all the questions that I saw on there, we currently are not offering the home ability. We do not run off of calendar year. We run off fiscal year. So July 1st is when all of the state of Maryland's budgets get realigned. So on July 1st, you may see programs with Howard County or Baltimore City or Prince George's County that partner with us. You might see the home ability come back that helps individuals purchase homes that are on disability or SSI, or that are caring for a person who has disabilities. So always reach out to our website. It's a public website, www.mmp.maryland, maryland.gov. And when you go to the home page, you go right down to the very beginning and you say, talk to a lender, or you're going to get the lender's information that's on this call right now and reach out to them. They will help you determine how much you qualify for. They will help you determine what program off of our rate sheet is the best product for you. You get money from us, and you can also get money from any other city or county program that you partner with. So we use the analogy of all these buckets of money out there. You can stack all the buckets. As Nikki said, there are borrowers that have come to use our program. They don't even have to bring their checkbook or their pocketbook. And in some cases, they actually walk away with money. They might walk away with their earnest deposit back. So it's a great product. I know that it's now 7:34, but I don't know if anybody has any questions. I'm sure we're all more than willing to stay on, but just let us know.
Thank you so much, Catherine.
I can do it in 5 minutes.
You can get through that presentation, and that's crazy because of how much amazing information you get through in such a small amount of time.
Longer, you guys, but the gist of it is you have to go to your lender first. You got to make sure you qualify. You got to make sure that you can afford what you're purchasing. And don't go into that house without having extra money in your hand so you can buy toilet paper or go out to dinner or whatever it is, right? The lender will help you. That's why we have Barry and Jordan on the call. They're here to help you guys. Then once you get the pre-approval, you go to Nikki and say, all right, I'm ready to shop. Let me tell you where I want to live. And then definitely reach out to Jim Hall or the Freddie Mac programs, because they're also very beneficial and they provide educational resources as well. All right. I'm done talking.
All right. So we do have, I think, a couple of questions.
Okay.
One of them for you, Catherine, is if you stay in your home that you use Maryland Mortgage Program and you get one of the like $6,000 that you have to pay back after when you leave the home, do you have to pay it back if you don't leave?
Yeah, so all of our loans are a fixed 30. So any down payment assistance, DPA, that you get from us to help you buy your home, you have to pay it back when you sell or refi. So let's say you don't ever sell or refi and you live in there for 30 years, which I doubt, because you might, you're going to want to keep up with the rates, right? So if the rate can be refinanced, you're going to want to refi if it's advantageous. But you eventually will have to pay back because it's a lien on your property. You have your first mortgage, which is your mortgage. You eventually have to pay that off, right? Well, the down payment assistance is a second lien. So when you sell or refi, it has to be paid off. And if you end up staying in there forever, whoever ends up taking over your property, whether it's inherited or not, it's going to show up as a lien, and eventually it's going to have to be paid back. It's not forgiven. It doesn't magically disappear. People often ask, why do we not run out of money? Because currently our programs are a loan. There's no interest, there's no monthly payments, but you do have to pay it back. Now, if the market changes, yes, in the past we have offered grants, but they've been at a higher interest rate. So because the rates are higher right now, we don't want to offer a higher interest rate to give you free money. But keep your ear to the pavement, because maybe it'll happen again.
Awesome. Thank you, Catherine. Another question has come through, and I feel like Nikki, you might be a good person to answer this one. Can anyone answer? What's the average time frame to qualify from start to finish as a first-time home buyer?
Okay. I typically tell people, if they, again, I like to back them into that timeline. So I'll always ask, okay, if you have a lease, when does your lease end? So we can figure out when you have to give notice, and then we'll start the process based on that. But typically 3 to 6 months. 3 to 6 months to get to start the process. We can figure out where you are. It depends upon if they need to increase their credit scores, or they don't know what their credit scores are. They need to save if they don't have, anything to actually put into the property. I tell people, start preparing. At least give yourself 3 months, 3 to 6 months, depending upon what's happening, to actually get going and then get into the process, be in your home 6 months to maximum, 6 to 9 months, I would say.
Okay, so I'm going to brag. Once the lender, and Jordan can certainly chime in, but once the lender takes your application and approves your loan, because they've done this with their eyes closed, they can get your loan to close within 30 days.
Absolutely. Obviously, that's
Yeah.
once you've already gone through all the process of preparing.
Jordan, am I wrong?
No,
Huh?
you're 100% right. And you guys have became rock stars in clearing up your end. Because basically we get a clear and close first.
Yeah.
And then we said, if you guys are 24 to 48 hours, but I have not missed the closing yet.
Yeah.
So
I love it.
Yeah.
Yep,
So once you get the pre-approval, that lender, they can get your loan to close from the time of application. Once you find a property, they can get it closed in 30 days. Easily.
Absolutely.
Yeah.
And what I love about MMP is there could be a maximum, if there is, maybe a couple of days on top of that. But I've never seen it go past 30, ever.
No.
Wonderful. All right.
Preliminary work is what I was talking about, if they're not prepared. That's all.
Okay. So if I use the DPA and want to pay it off early without refinancing or selling, yeah. So let's say you borrowed $6,000 from us, or let's say you borrowed 5% of the total first mortgage, round down, no change. You can pay that off whenever you want. And whenever you want, you can contact us and say you want to pay off for your down payment assistance. let's say you hit the lottery or you inherit some money and you don't want to have that second lien on there, you can pay off without any prepayment penalties. We will gladly allow you to pay off your down payment assistance. How can I get a 4% mortgage rate? I don't know. I think I'm gonna let Jordan answer that.
I don't want to say hoping and praying is a
time
good.
machine. I was in time machine. The time machine might take you back a little bit.
We're praying that comes back.
Right. Yeah.
I will put out there, right? I think that working with a really good company that works in your best interest, that has been here and has tenure, I think is really important, because what I'm looking for if I were a borrower is, do they take care of clients? Do they work well with their real estate agent, which is, essentially our partnership, right? And while rates are not in the 4s today, right? Most lenders, if not all lenders today, are really trying to help borrowers and to put them in homes.
Date the rate, marry the house. That's what
There
we
you
say,
go.
right?
That's right. Date the
marry the
rate,
house.
marry
Date
the
the
house.
right.
So, and let me say this as well. I think a really good lender that also wants as opposed to a transactional relationship, that's not how you're in business for 26 years. I don't mean to pride ourselves too much, but if you're here and you have a tenured relationship with your mortgage lender, they're working with you to help you refinance, and they're helping you and giving you incentives and lender credits to say, hey, let's get you in now, where respectfully it may be more expensive, but how can we be an asset and earn your business for life, right? How can we partner with you over time when markets are up and markets are down? How can we be partners for life? So I think that if you work with the right company, they're going to kind of adhere to that type of structure. And I want everyone to think, Gary's my guy to pick up the phone and call, right? Call Gary for life. You have questions, Gary's your guy. So that's what we try to do as mortgage professionals, is to ingrain that in your head, that while it may be more challenging with elevated interest rates, which we do not control, right? Trust me, I wish they were at 4, right? What we can do is we can help you today, and we can help work on a strategy to help. We're almost like a consultant, is the best way I could say it. We're mortgage consultants. How can we help you today to achieve your goals and then set you up for success in the future?
Right. Hey, Jackie, there's one person I saw on there, and I wanted to make sure I pointed out to them. There was somebody that typed in there that they had good credit, they had a good job history, and for some reason, they said that they were told that their loan was denied. So I would definitely reach out to Jordan and have him connect you with Gary, so that they can look to see. Theoretically, you should have gotten a reason for your denial, so you should know why you were denied, and they have, by law, they have to disclose that to you. But I would definitely reach out to Jordan and Gary and see if they can figure out how it is.
If you want,
There's a lot of programs
phone number
out
in
there.
the chat. We can put my phone number in the chat.
Certainly.
Have them give them a call. I mean, I'll
Yeah.
definitely, take a look at it, and I'll give them a good explanation too,
Yeah. But they should have received a denial letter indicating
Right.
why they were denied.
Yeah,
But maybe it was a particular program that you were
Yeah.
applying for, that you didn't meet the certain criteria, but that doesn't mean that you still can't get a mortgage through another program.
I agree. Yeah, if you have good credit and if you have good income, then there should be no reason we shouldn't be able to
So
work
don't
something
give up, okay?
And a question, or more of a comment for that person, right? I think that one thing is to keep in mind is that there's a lot of different companies and there's a lot of variables that go into this. There are banks, there are brokers, there are lenders. And I think that what's unique, right? And I don't want to say about Castle, but every company and their structure matters. And not many people on the surface understand that. A bank is different than what we are. We're a non-mortgage or non-bank mortgage company, which is different from a broker. The other part that I wanted to just briefly mention.
Yeah, I'm sorry, because I know we're at all. Was there any more questions to answer?
Oh, I don't know. Jackie, are there?
No, not currently.
Okay,
No. No. Well, I just wanted to say that, it's important that every lending or broker or whoever, what type of lending structure, everyone has a different appetite for risk, right? And maybe one lender respectfully may not say, hey, I really want that appetite for risk. What's unique about Castle, we actually go down to a 500 credit score. So we work with borrowers of all profiles, right? So I think what's unique is get a second opinion, right? Nikki mentioned it, and she said it in her PowerPoint. It's the truth. You want to talk to another person, get a second opinion. And maybe the first person you talk to is set up differently than the second person that you talk to. So I think that, for the most part, just do double due diligence. And I think that don't get discouraged. I think that's a really good point from Catherine, right? Hey, maybe it didn't work out over here. Come speak to a second company. We would gladly take a look and advise. And if it doesn't respectfully fit the mold today, we can certainly coach you on where you need to be. And not a lot of companies are willing to work with clients over the course of time. And Nikki had said it best, education is key. Let's make that plan so that if it doesn't work today, how can we set you up so that respectfully you're in that dream home of yours in 3 months or 6 months or a year out? So we work with you to help there.
There's a question, Camille. Does the Home Ability give you 20% discount? So first of all, we're not offering the Home Ability currently right now, which I just want to reiterate. Look for it to be available in July, and you definitely have to apply with a lender. But what the Home Ability does, it's for somebody who is disabled or caring for a disabled person. And the combined loan to value, I'm just going to throw it out there. So it might be a little over the head, but is 105%. And the way that the Home Ability loan is structured is the first mortgage goes up to a 95% LTV. And then the second mortgage is then 25% of the purchase price. So you're capped at $45,000. So you do get a considerable amount of discount or funding.
Oh, this cold weather across the whole state, it's given us all Wi-Fi issues today, it seems. Um, Camille, if Catherine is able to hop back on and finish answering that question, I'm sure she will. But if not, so another reminder, all of these wonderful presenters will be CC'd in the email I send to all of you with slides and the recording and another link that if you just love this presentation so much, you want to come back next month, you'll be able to register again for the next presentation. You will be able to reach out to all of these individuals and ask them any follow-up questions you might have or anything that maybe you still have questions about that we weren't able to get to tonight. But it is 7:48 in a webinar that was going to end at 7:30. So in respect of everyone's time and the fact that I know I am looking to get myself some hot chocolate after this because I am freezing, thank you so much, everyone, for sticking around, not just for the whole presentation, but for an extra 18 minutes. As a reminder, our next Your Home Buying Keys webinar will be February 13th, the day before Valentine's Day, from 6:30 to 7:30 p.m. Please share that date with anyone who you think would benefit from this information or another soon-to-be home buyer in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. We wish you all of the success on your journey. If you have any questions, please email us at webinar@mdrealtor.org. Thank you all so much. Have a wonderful evening.